This particular mutual fund is one of the ones that we have um, with Fidelity. It's one of their medium-term funds. And as you can see, with a mutual fund, all you get is end of the day pricing. You don't get open, high, low, and close. You just get end of the day because it's a that price is comprised of the performance of another basket of stocks that make up this particular fund. And so we see areas here where the price is going up, usually here about the 10th of July or so. It went up, went sideways a little bit, and then started to go up again. Well, let's take a look and see what our mutual fund trader would have done for this. It's very easy to install, to run, and to interpret what the results are. In NinjaTrader, if you look up here at the top of the chart button, you'll see the gold dollar sign here. And that gold dollar sign is the strategy button. When you click on the strategy button, you'll see a list of other strategies that pop up, and these are all the ones that we're working on here. But the one that you'll want to check is the mutual fund trader, okay? And it will ask for a number of different defaults and inputs, but you can just leave those as it is. We're going to run a new mutual fund trader and click OK. Now, if you have an account with one of the NinjaTrader brokers that supports buying and selling equities, and your mutual fund happens to be for sale or traded on the New York Stock Exchange, for example, the mutual fund trader, you can allow it to actually enter the buys and the sell orders for you automatically. So you can let it work its magic in a very automatic way. You don't have to do that, however, and I'll show you how in just a minute. I'll show you how, for example, I set my mother up on it just as a little extra measure of security, so that she felt more comfortable doing it in a certain way. Sometimes price goes up, and we think it's going to go up, and it immediately turns around. The arrows are generated at the close of the bar. So at the close of the bar, because these are end of day data, it will generate either a buy or a sell notion. And that's okay, because generally with both mutual funds and stocks, we're not trying to time our entries and exits. All we're looking for is, statistically, is it going up or is it going down? Okay, and so here what we have is, for example, in the middle of July, we bought the Fidelity fund here. We have a buy at about $12.63 per share, and it held it through a number of smaller corrections, sold it at $14.66. So we made a pretty good profit. We lost on the next trade about 30 or 40 cents. And then after that, we had a number of trades, and at the end of trading yesterday, it generated another sell signal. But you can see that it's actually done a very good job of following the trends and following the price moves without necessarily having to hope that, for example, this correction here is actually going to go back up and not necessarily down. Let's take a look at another one that we have. Let's see here. Here's one that performed very well for me last year, and you can see it's not one that I've traded this year, because it has a lot of, see, this sort of camel-backed up and down movement. We made a small profit here, another small profit, another couple of small losing trades, and another sizable gain here. So overall, it's one. But anytime one of the ways or one of the situations where the mutual fund and the stock trader systems don't perform as well is when you see this sort of up and down movement, back and forth over and over and over. And so let's see here. There we go. And you see that it goes up, but this sort of up and down and up and down and up and down, that sort of back and forth motion isn't really conducive to knowing, for example, if we look back here earlier, If we look back here earlier, it went up and down and up and down, and it kept going up. Well, is it going to do that, or is it going to just continue to fall off? That's something that we don't necessarily know. But it will, for the most part, keep you out of it. Here's another one, another mutual fund that's currently in my portfolio, in my own personal portfolio right now. You see that it bought it at 41 and a bit of change, and it got out of it at 47. We had a little false signal here. It actually went up a little bit, but still came back down. But then we caught it again at 46, and it just generated an exit signal at 52. So this weekend I'll be realigning my 401k mutual fund investments to take advantage of that. And as you can see, here's another pretty good one. It bought it at 72 and got out at 77. We had another buy at 69. Went up to 72. And essentially what you're doing is, you see these little dips right in here? You're avoiding that particular risk. Yes, it did go back up, but at the point where it's going down, you have good evidence that the price is going down. And at that point, you don't want to be in it. Now, it may go back up, or in 2008, as we found out, many times it did not, and it continued straight on down. And here's another one that is currently in my portfolio. We bought it at 49 and a half or 45 and a half, went up to 52, made a nice gain, went sideways a little bit here. It started to go up and then turned around real fast. We didn't lose any money, but we didn't really make any, and we didn't weather the market in that risk, and bought it at 55, and it generated a closing signal today at 58. One of the things that I did for my parents to help them feel comfortable, because they like to have control, is to set them up on NinjaTrader and just tell them to take the buy and sell signals here and use whatever broker you already have an account with. For example, you may have a company-sponsored account where you are only able to buy and sell during or using their own individual software. That's okay. As Mike said, NinjaTrader allows you to do the charting, and it allows you to do the plug in the system. You can get the information from the Yahoo financial servers, and just use that information to rebalance your portfolio. Tony asked a good question. Why would you trade a mutual fund? Well, you trade a mutual fund in your 401k plan because that's the only option that you have. In many company-sponsored or corporate-sponsored retirement funds, you don't have the option of holding individual equities. For example, in my situation, I have a case where I can buy and hold any mutual fund that Fidelity has. So that means that I can buy and sell anything that they have, but I can't hold, for example, individual stocks. And so I need to know when their funds are going up and when they're going down so that I can maximize the return on that particular investment. It's worked out well for me. Somebody had asked about how do we do during the crash. Obviously, we didn't make a lot of money. But we certainly didn't lose nearly as much as the market. I think the market was down 40% that year, and we were down about 5% total for the year. What I actually should have done is just put it all in a bond fund rather than some of the other ones. But that's my own individual investing decision, and it's one that I learned very well. And everything that I've read on the market, I'm watching the bond funds very closely, watching these because I don't think our stock market correction is over just yet. I think there's some more tough times ahead, and in the case where things really start to go sour, I'll be putting it in a bond fund there. Yes, John, the buy and sell signals did actually lag about a day between the buy and the sell. It's something that you can execute overnight. It's not something that you have to go through to time the market, and it's something that